What's good? Yo, what's up, YouTube? This Pursuit of Freedom. Hey, now when the market looking this ugly, meaning I got more selling than I do buying. What's that though? So that's from the 7th. Like, it's crazy. I mean, the Wilshire ain't have no attention at all today. I mean, that's telling you a viciously weak market. Even though this thing is usually only trading about $2 million in dollar volume, it ain't got no action. Market is purely weak. I think I'm okay with the fact that the S&P and the Dow, the absolute lows down here at 2380 got bought up, but the fact that it reached down to 2380, for me that means that we're going to be back down to 23,000 something. Same thing with the S&P. The S&P reached down here to 2584. That means we're going to be back down in that area. We might get a little brief pop, but I don't think we're even going to get to any of these highs right here, let alone making it all the way back up here. I mean, it may push back up because that's only a, look at that box, 6% push, but we're getting lower highs. I want to see if that trend holds. But more than that, well, I'm saying that to say that sometimes the best trade is no trade, and that's what makes paper trading practice and so potent. Now, I merely want to talk today about sometimes the best trade is no trade. And being that there are no trades, let's talk about moving averages. You see, I look at 3 long-term, 3 short-term moving averages. Uh, okay, so this is Hemp America. The moving averages are all close together because this thing has been trading sideways for 2 years. You got these random big spikes, big spikes, big spikes, but that's a pretty weak chart to look at. Let's look at a chart with some movement. All right, so we got INNT here. I just want to focus on the daily chart uh, and kind of just begin to tell you why you want to look at moving averages. Now I got a much better chart to look at. I got a bunch of levels in here that I was watching at some point. So I'm going to delete a couple, being that some of them are not in play anymore. So we can see pure price action. Matter of fact, I'm going to drop that down to the current level of support. I get rid of this one. Now my chart is wide open. Now, coming back over here to March, we got my shorter term moving average, my longer term, this exponential. You also have a simple moving average. You got the Hull's moving average, what I don't use that. I use exponential moving averages. They just tend to be, I don't know, just the choice that I ran with. I put them on my charts and I ran with them. I looked at Amenia charts and kind of see how the price action interacts with them. So I got the 4 in white. Most people won't watch a moving average this short, but I've really got this one up here to help me get out at the earliest possible convenience, even though at times I don't follow that because it doesn't offer you enough wiggle room. Even the 13 sometimes doesn't offer you enough wiggle room, but if the 13 gets broken down, I'm looking to get out of most trades, unless stubbornness takes over. But looking at the price action in comparison to the 9 and the 13, it tells a story. The story that is being told with INNT, Innovate Biopharmaceuticals. Biopharmaceuticals right now are some of the hottest plays that are still left in this bearish market. But when the price action is above these considered to be short-term moving averages, the story being told is that the bulls are in control. So the bulls own this price action as long as the price action is above the short-term moving averages, specifically the 13 or the 9, in my case, both. If you're using the 20, that'll work too. But the opposite is also true in that same case. With the short-term moving averages, the price action reached up and found a high. It came back down and squeezed beneath the short-term 13 and 9 EMAs, exponential moving averages. And from this point, from this area in here, the bears take over control and sell this thing back down. Now, also what I want you to take a look at is that on whatever day that this here was, let's zoom all the way into this area. Look at how whatever this candle is right here, this doji looking candle, it came down and looked like it wanted to touch this 50 EMA exact and stayed there, held as support. Just like the 9 EMA is holding as support, and we're well away from the 13. When the price action crept back to the 13, that was a sign to sell, get out, because look at the rest of this, just consolidation, and then weakness took over. You know what I'm saying? So sometimes you get a perfect resting point for a stock right on top of a moving average. And then this happens so much once you put these on your chart. Another example, this little area right here. I mean, just look at how for a short amount of time, the price action is resting right on top of this 200-day moving average. And that's something that I picked up over time too. When price action falls, especially if the moving averages are in order, you got my 200, my 100, the 50, the 13, the 9, and the 4. When price action falls all the way down to that 200-day, sometimes that 200-day will act as the perfect support level for the bounce. These are the reasons why you put moving averages on your chart and watch how price action interacts with them. But I'll tell you the quick problem. If you're just following what's going on with these moving averages, we got the two short-term moving averages, just watching the two lines cross beneath the 50. That's telling you that weakness or the bears really got control of the sentiment. As these lines cross beneath not only the 50, but the 100, the bears really got control of this stock. So this short bounce, usually what happens is this little spike gets sold off. The bears reclaim control, and it doesn't reach any of these previous highs set back over here. Close enough, but no cigar, right? Close, but no cigar. You know what I'm saying? And it ain't go nowhere near this absolute high that was set. Being that the price action or these moving averages cross beneath two of my longer term trends before the bounce, that usually tells me, and the bounce didn't get back nowhere near this high, that the bears are still in control, or this is just a sign of weakness in the overall market. Now I scroll out, you see that volume is very weak, or the float is very high because that volume says 14 million in the dollar volume at least. Actually, the float on this stock is pretty low at 4.9 mil. So that just means that this is not something you want to invest in for long term. You want to trade this when the price is hot, when you got some volatility. Volatility is important. We're looking at volatile markets right now. Any of these little pops are probably being sold. Anytime you get this little pop sold, short sellers will hold these things sometimes good till zero if they got enough money. I want to delete those because I really ain't watching those. It's just examples of why you want to watch and put moving averages on your charts. Another stock, whatever's next. I mean, I can use this once again. It's Lanniu Technology. I think this is the Chinese stock. These things have massive spikes. I think there's just far more Asian investors than there are American investors, and especially in Chinese companies. It says 1 for 6. So this was a split on this day. But above the short-term moving averages, the trend, when the price action is above the short-term moving averages, the trend is bullish. But the minute we get a true cross and hold beneath that short-term moving averages, the bears take over the trend. You know what I'm saying? It's just more to watch. I'm looking at, it's a bunch of garbage. Look, they're okay. We got a little bit better solid, not necessarily solid, but a better looking chart. And just once again, it always illustrates I like the way that this thing separated from the 50 before it returned back beneath and the bears taking over. Another thing I like to watch is back to today when the price action crosses above. Oh man, uh, look at the resistance. It pushed all the way up to the 50-day moving average exactly. I can't tell you how many times in a day I will see stuff like this. Put moving averages on your charts and just watch them and see what happens. That's just moving averages. I also got another indicator down here called the relative strength index, which is overbought or oversold. And whenever a stock's price, and this is the Wilders, whenever the stock's price is near this red line up here, a stock is considered to be overbought. And most of the time, as you can see here, it'll quickly get sold back down. This thing has kind of been riding right on top of the oversold, at least this stock, and now it's beginning to push back to that overbought territory. I like the fact that it pushed strong enough to go from 1 day action straight to the 50, and then another day straight to the 100, and then another day straight above the 200 and back beneath, showing you a sign that the bears are saying, okay, this is too much. The bears take over. Put indicators on your charts. You ain't got to put 6 like I do. I just got them all available to me. I'm paying for the software, so I'm not trying to clutter my charts, but I do want to watch the price action and how it interacts with these various different indicators. Watch the relative strength index too, even though at times I really ignore this, but I will combine it and put indicators together. See, I got dollar volume breakout because volume buying pressure hasn't been of this great since that last day on November the 8th. Now, just about a full month later, we get another big green candle. And I also got strength now in this stock. Now, combining all these indicators, now I want to go look and see whatever this company is doing. My curiosity has been spiked. I want to read now. But that's what it takes for me, because I'm going to obey the price action, or at least I'm going to try to obey the price action before anything. But that's just to give you a little hint, some more little tips, something else to look at, and why I look at moving averages. This is Pursuit of Freedom.